Whether you're completely new or already familiar, this video will cover everything you need to understand Bitcoin, how it works, why it matters, and what the future might hold. Let's get started. Part 1. What is Bitcoin? Bitcoin is a form of digital currency, created in 2009 by an anonymous person or group known as Satoshi Nakamoto. Unlike traditional money issued by governments, Bitcoin is decentralized, meaning no single authority controls it. It's based on a technology called blockchain, which is essentially a public ledger. Think of it as a digital record book, open for everyone to see but impossible to alter without agreement from the network. This transparency and security make Bitcoin different from anything that came before it. Unlike dollars or euros, Bitcoin doesn't exist in physical form. It's entirely digital, secured by complex cryptographic algorithms. Part 2. How Bitcoin works. Bitcoin transactions are verified and recorded by a process called mining. Here's a breakdown. When you send Bitcoin to someone, the transaction is broadcast to a network of computers worldwide. These computers, called miners, compete to solve a complex mathematical puzzle related to the transaction data. The first miner to solve the puzzle adds a block of verified transactions to the blockchain. For their effort, miners earn newly created Bitcoins as a reward, which also introduces new Bitcoins into circulation. This mining process uses a consensus algorithm called proof of work, which requires a significant amount of computing power and energy. While this ensures security and trustworthiness, it's also one of the main criticisms of Bitcoin due to its environmental impact. An important feature is Bitcoin's fixed supply. There will only ever be 21 million Bitcoins. This scarcity is built into its code, unlike fiat currencies, which can be printed endlessly. Part 3. Why Bitcoin matters. Bitcoin is significant for several reasons. Decentralization. No banks or governments control it, which appeals to people wanting more financial independence. Inflation hedge. Because of its limited supply, Bitcoin is often called digital gold, and many see it as protection against inflation and currency devaluation. Global transferability. Bitcoin can be sent across borders quickly and with relatively low fees, which can be especially important in regions with unstable banking systems. Financial inclusion. People without access to traditional banking can use Bitcoin to participate in the digital economy. However, Bitcoin is still evolving, and there are challenges, such as price volatility, regulatory scrutiny, and technological barriers that investors and users must consider. Part 4. Bitcoin price history and volatility. Bitcoin's price has experienced dramatic rises and falls. It started practically worthless in 2009. In 2013, it first crossed $1,000. In late 2017, Bitcoin reached nearly $20,000 before dropping sharply in 2018. After steady growth, it hit an all-time high above $60,000 in 2021, then fluctuated widely. Right now, a Bitcoin worth $6,000. Why such swings? A few reasons. Bitcoin's market is still relatively small compared to traditional assets, making it more susceptible to large trades and speculative behavior. Regulatory news, whether countries ban or accept Bitcoin, has a strong impact. Media coverage and hype cycles create emotional buying and selling. Understanding this volatility is crucial for anyone thinking about investing in Bitcoin. Part 5. Getting started with Bitcoin. Practical steps. If you're interested in owning Bitcoin, here's a simple guide. Choose a wallet. You'll need a digital wallet to store your Bitcoin safely. Wallets come in many forms: apps, hardware devices, or even paper wallets. Select an exchange. To buy Bitcoin, use a reputable exchange like Coinbase, Binance, or Kraken. They let you convert fiat currency, like dollars, into Bitcoin. Start small. Because Bitcoin can be volatile, it's wise to start with a small investment. Secure your assets. Keep your private keys safe. These are like passwords that control your Bitcoin. Losing them means losing access to your coins. Part 6. Risks and considerations. Before investing, it's important to know the risks. Price volatility. Bitcoin's price can change rapidly. Regulatory uncertainty. Different countries have varying rules. Some ban Bitcoin entirely. Security risks. Hacks on exchanges and phishing scams can lead to losses. Technology risks. Bugs or flaws in the software could cause issues, although Bitcoin's code is considered highly secure. Always do your own research and consider your risk tolerance. Part 7. The future of Bitcoin. So what does the future hold? Bitcoin has paved the way for thousands of cryptocurrencies and innovations like smart contracts and decentralized finance, DeFi. Some experts believe Bitcoin will become a standard store of value like gold. Others worry about competition or regulation limiting its growth. What's clear is that Bitcoin has changed how we think about money and financial systems, pushing the world toward more decentralized and digital solutions. Thanks for watching this deep dive into Bitcoin. If you found this helpful, please like, subscribe, and leave your thoughts below. What do you think about Bitcoin's role in the future of finance? Stay informed, stay cautious, and I'll see you in the next video.